Hey there, financial navigators. Welcome back to the channel where we demystify the markets and empower your trading journey. Today, we're diving deep into a fascinating corner of the market, hard to borrow stocks and the potential for a short squeeze. And we're putting one specific company under the microscope, Token Cat Limited, trading under the ticker TC. This stock recently popped up on our screeners with some truly eye-popping cost to borrow numbers that demand our attention. So grab your canap because we're about to explore what makes TC so unique right now. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show TC logo and chart. Let's get straight to it. Token Cat Limited, or TC, operates in the communication services sector, specifically within advertising agencies, though its business model is an omni-channel automotive marketplace in the People's Republic of China, along with electronic equipment trading and consulting services, makes it quite diverse. Formerly known as Tuanqi, TC currently carries a market capitalization of $58.01 million. Looking at recent price action, it's been a bit of a rollercoaster. Today, TC saw a modest change of 0.45%. Over the last 5 trading days, however, the stock is up a solid plus 7.32%. But zoom out to the last 30 days, and you'll see a dramatic decline of minus 75.11%. In terms of volume, today's trading volume was 255,600 shares, which is significantly lower than its 30-day average volume of 2,908,660 shares, giving it a relative volume of just 0.1x average. What's cost to borrow and why it matters? Show animation of short selling process. Now let's talk about the crucial concept, cost to borrow, or CTB. When you short a stock, you're borrowing shares from a broker and selling them, hoping to buy them back later at a lower price for a profit. But borrowing isn't free. Brokers charge an annualized fee, the cost to borrow, for lending you those shares. This fee is a direct expense for short sellers. Why does it matter? Because a high CTB signals a few things: either demand to short the stock is very high, or the supply of available shares to borrow is very low, or both. When a stock is hard to borrow, it means exactly that. There aren't many shares sitting around for short sellers to get their hands on, and the ones that are available come with a hefty price tag. Yes, these fees can easily exceed 100% annually, as we'll see with TC, because it's simply a supply and demand dynamic for borrowed shares. Why this stock is hard to borrow right now. Highlight CTB on screen. So, why is Token Cat Limited TC on our radar today? The numbers are quite striking. The current annualized cost to borrow fee for TC is an astonishing 957.6%. Think about that for a moment, nearly 1000% just to hold a short position for a year. What's even more compelling is the momentum behind this number. The CTB is surged by an incredible plus 873 percentage points over just the last 5 trading days. This isn't just a high fee, it's a rapidly accelerating fee. Adding to the pressure, there are currently only 15,000 shares available to borrow for TC. When you consider the estimated float of 7.5 million shares, 15,000 is an incredibly tiny fraction. This creates a highly liquid situation for anyone wanting to short the stock. Our internal composite squeeze score, which combines factors like CTB level, momentum, borrow supply, float size, and price/volume action, currently sits at 55.9 for TC. This score suggests a notable potential for volatility due to these hard-to-borrow dynamics. Squeeze mechanics explained. Show squeeze graphic. Alright, let's connect these pieces to the idea of a short squeeze. A short squeeze happens when a stock's price rapidly increases, forcing short sellers to buy back shares to limit their losses. This buying action further pushes the price up, creating a snowball effect. For Token Cat Limited, with a CTB of 957.6% and only 15,000 shares left to borrow, short sellers are feeling the heat. If TC's stock price starts to climb significantly, the short sellers are not only losing money on paper, but they are also paying nearly 1000% to maintain their positions. This extreme cost, combined with the shrinking supply of shares to cover with, can create a powerful incentive to exit their short positions, which means buying shares and driving the price even higher. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. Sometimes, short sellers have strong conviction in their bearish thesis and are willing to pay these high fees to stay short, believing the stock will eventually fall. Dilution risk check. Show SEC filings text. One critical factor to consider in any potential squeeze scenario is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can depress the stock price and potentially negate or significantly weaken a short squeeze thesis, even if the cost to borrow is sky high. More shares mean less value per share and more supply for short sellers to potentially cover with. For Token Cat Limited, our diligent check found no recent diluted SEC filings such as SMIN S1, SMIN S3, or 424B in the last 90 days. Furthermore, there have been no recent reverse splits for TC in our look-back window. This is a positive sign for any potential squeeze thesis, as it removes one significant hurdle. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show key metrics on screen. So, what should you be watching if you're interested in Token Cat Limited, TC, from an educational perspective? Keep a close eye on the cost to borrow if it continues its rapid ascent and stays elevated. Also, monitor the shares available to borrow. Any further reduction from the current 15,000 shares would be a significant development. Volume would be key. Remember, TC 30-day average volume is nearly 3 million shares, while today it was just 255,600. A significant increase in trading volume, especially above that 30-day average, coupled with positive price action, could signal increasing interest. After a minus 75.11% drop in the last 30 days, any sustained upward price momentum would be notable. Finally, always stay informed about any company-specific news or broader market trends affecting the communication services sector or the Chinese automotive marketplace. Show channel logo. Token Cat Limited, TC, presents a truly compelling case study for understanding hard-to-borrow dynamics and the mechanics of a potential short squeeze. With its nearly 1,000% cost to borrow, extremely limited share supply, and significant recent price volatility, TC offers a live example of the forces at play in these niche market situations. Remember, this isn't investment advice, but an educational deep dive into what makes a stock hard to borrow. What are your thoughts on TC? Have you ever tracked a stock with such a high cost to borrow? Let us know in the comments below. Don't forget to like this video, subscribe to the channel for more market insights, and hit the notification bell so you don't miss our next educational breakdown. Until next time, stay sharp, stay informed, and happy learning.